What's going on, everyone? My name is Joe Rapisarda, and this is the March 24th, 2020 edition of the Rap Report. So here we are. This is, I believe, day 9, 10 now in quarantine for myself. As many of you have also stayed in quarantine. We're going to begin today's episode with a quote from Alan Greenspan. Alan Greenspan was the Federal Reserve chairman through the 80s and 90s, I believe. So the quote goes, "We don't have a system that's working. We have one that moves cash around, and we can guarantee cash benefits as far out and whatever size you like, but we cannot guarantee their purchasing power." Now, this quote is significant for today's episode and the type of environment that we're moving into now within the U.S. and also with currencies around the world due to the response of the COVID-19 coronavirus outbreak. In prior episodes, we've talked about how central banks have now introduced the idea of universal basic income. In the U.S., we've talked about the government now deciding that they are going to issue $1,000 checks for every adult making under $70,000 a year, I believe the number is, and also an additional $500 for each child that individual is responsible for. Now, Alan Greenspan's quote is in reference to the dollar, and the dollar not being backed by anything anymore. The dollar had been backed by gold until 1971 when President Nixon took us off the gold standard. From then, it was really an experiment with the currency. The U.S. dollar is what we consider a fiat currency, a paper currency that has no backing. The only thing backing the dollar now currently since 1971 is essentially the U.S. military and the credit of the United States government, which we now know the credit of the government is not doing well. Ever since the housing crisis, we've increased the money supply by, I believe, around $17 trillion. And as we'll talk about in today's episode, last week alone, we saw the money supply increase by $7 trillion with little reaction from the market. So just to catch up here, so the Dow is continuing to tumble daily. I think yesterday we saw a few percent drop. The Dow is down now 40% from its all-time highs back in January, and it has wiped off all records, all gains since President Trump came into office. So, we're not done yet. We're about 2 weeks into, self-quarantine. So I'm expecting that as people continue to stay home, we'll probably see increased jobless claims, unemployment, and unfortunately probably more downturn in the markets. We've been reporting this to you from the Rap Report, and then also before the Rap Report, during the Rap Report, the Nonconformist. I've been running the Nonconformist with a partner of mine since last September. We still give out weekly updates in that newsletter as well. So if you'd like to subscribe at the Nonconformist, please go to thenonconformist.substack.com, or you can get your information from me here at the Rap Report. So the Dow has dropped 40% since its all-time highs, and now we are seeing reactions in the real estate industry. So the real estate industry is unique because, commercial real estate and real estate is a large part of the financial infrastructure around the world and the economy. So, when real estate starts to be affected, we typically have a big problem. During the last housing crisis, we knew it was driven by subprime mortgages in 2007 and 8. So essentially, lenders and banks were giving out mortgage loans to Americans who, quite frankly, could not afford them. And these loans were given out, and then in the background in the banking system, there was what was called credit default swaps. So, these mortgages were pulled up and they were traded off between different banks. And that's kind of where the system had essentially collapsed, the domino effect, when people weren't able to pay back their mortgages. Now those assets that the banks were selling that were mortgage backed weren't making any money. So that's what happened back in 2007. But here we are in 2020 in the heart of what's looking to be the worst financial crisis since the 1929 crash, potentially even worse than that. We'll see what happens in the future. But I'm going to read you a quote here from a Bloomberg article on commercial real estate. So the quote is from actually Lisa Abramovich. She says, real estate billionaire Tom Barrack said the U.S. commercial mortgage market is on the brink of collapse and predicted a domino effect of catastrophic economic consequences if banks and governments don't take prompt action to keep borrowers from defaulting. Now, this is it's kind of expected, because if people are starting to become unemployed and they aren't able to work for a living and make income, how are they going to pay their mortgages? How are they going to pay their rent? We know in the United States and around the world, the wealth gap has been as bad as it was in the 20s and 30s, the 1920s and 30s. So this is, kind of a perfect storm here for, commercial real estate to not do well. So we're seeing this both on the residential side, so people like you and I that are not able to pay their rents, but we're also now seeing it on the business side for commercial real estate, because the U.S. government has shut down completely, essentially, the country. So small businesses such as coffee shops or restaurants or, other type of retailers are not having foot traffic in their stores, so they're not making income, so they're not able to pay their rent. I believe this is part of the reasons why we're now starting to see the collapse within the commercial real estate market. Now, the American people were almost sold on WeWork. WeWork, back late 2019, they tried to go public with an IPO of around, I believe, like a $50 billion plus valuation. WeWork's business model is to essentially take out a long-term lease on a building, and then what they do is they sublease it to entrepreneurs and small businesses who need office space there. So they're taking out long-term leases, and then they are subleasing it through, hourly rents to entrepreneurs and small businesses. Well, we now know that the American people they were really saved from that type of investment, because it didn't go through. Late 2019, the WeWork IPO broke up. Investors pulled back. SoftBank had a big issue on their hands, and they never launched. I had heard back then that WeWork was one of the largest commercial real estate holders or leasers in New York and in London, and a lot of cities around the world. So, it's interesting now that we're seeing a crisis happen within the commercial real estate market. I'm sure WeWork's offices aren't going to be helping that situation, because they haven't been bringing in any type of rental income for months now. And we saw that when their IPO pretty much went completely under last year. And, I'm sure it's not helping the situation now. Going forward, I think it'll be interesting to see what the U.S. government does for these commercial, real estate owners. We're already seeing the idea of universal basic income. We're already seeing in Italy, the government's told their population to not worry about mortgage payments. And, so this will probably happen in the United States. I mean, I wouldn't be surprised to see a bailout come their way as well. But one thing's for sure, until people are back and working and until the economy's operating again, I don't think this commercial real estate situation is going to get any better. So hold tight, more to come on that end. The next thing I'd like to discuss here today is the amount of inflation that's happened. So the Federal Reserve last week had stepped in and issued the most amount of money, meaning that they essentially printed $7 trillion. So last week the Fed had a bunch of emergency meetings, and when all was said and done, they were supplying around $7 trillion of new liquidity to the financial markets. This is a big deal because, number one, that was the largest stimulus package I believe we've had or ever had. After the subprime mortgage crisis in 2007 and 2008, the years following, we had, I believe, around $17 trillion of support that was printed into the economy. And that was over a factor of a few years. We're seeing 7 trillion in 1 week last week. I would have expected, or in the past, what has happened is that when the Fed has stepped in and done something like this, the markets have rebounded. But what we've noticed is that the markets are not reacting to this freshly printed money. There's a belief, I think, going on now that the current system and the currency in itself is really on the brink of collapse here. Another thing to support that is that the U.S. for the first time just went negative with treasuries. So the U.S. 1-month treasury, as of 8 hours ago, was pegged at negative 0.013%. I've talked about negative interest rates quite a bit in the past, and it seems like the day has come and the U.S. is in negative interest rate territory. So we were one of the last, and I believe the last in the world, to have positive interest rates. And we've talked about this on the Nonconformist and the Rap Report for a little while now. But the U.S. has now entered this period where we have negative yielding debt, negative yielding treasuries. So this is going to be an interesting situation moving forward. We have negative rates, negative yielding treasuries. So that means if you put your money in bonds, you're going to be losing money. We have the stock market, which is continuing to tumble. So, any money you have in stocks is losing money. And you also have the Fed supplying $7 trillion in 1 week, and that's not expected to stop here. So we have an inflationary period that we're entering in as well. We also have the black swan event, the coronavirus, which has stopped all consumption. So people aren't really buying as much as they had in the past. But even worse, they're also not productive. They're not producing goods or services. So the economy has essentially come to a standstill right now. I'm under the belief that, as time goes on and as the Federal Reserve begins to issue paychecks to people and bail out more and more businesses and banks, the money supply will not stop growing. As a matter of fact, I think we've seen so far, last week was a clear indicator that $7 trillion was not enough liquidity to fix the problem. They're going to need to print a lot more than that. If you go back in history and you look at periods where currencies started inflating, the Weimar Republic was one with Germany just after World War I, when the Treaty of Versailles was signed. The Weimar Republic existed, and the German people didn't want to go work for French factories anymore, and the German government decided that they were going to send all their paychecks home in the mail, so they didn't have to go do that. And that's the turning stone that ended up leading to hyperinflation with that currency. So this is the main topic for today, because there is something that you can invest in to help protect yourself through these periods. We've talked about gold and Bitcoin on the podcast before, and I still think that their argument now is more sound than ever. Gold and Bitcoin are scarce in themselves. There's only so much that exists on Earth. Arguably, Bitcoin is more scarce than gold at this point, because we can dig deeper and find more gold. We can go and mine an asteroid somewhere in outer space and bring back gold and add more to the circulating supply. But these two assets are fixed in supply. The Federal Reserve just created $7 trillion last week out of thin air. You can't create more gold out of thin air, and you can't create more Bitcoin out of thin air. So these assets will become very, very important from here on out, because you're going to continue to see them increase in price, meaning gold and Bitcoin. And that's because of the dollar's inflationary circumstances right now. And going forward, if the dollar continues to inflate, you're going to see the price of Bitcoin and gold go up because of its scarcity and because the dollar is being debased. I mean, it's worth less today than it was last week because there's more money in the overall supply again. Now, it's in one thing. Another thing that I think is important to remember through this is that when you see the price of gold in dollars and you see the price of Bitcoin in dollars, Really what that represents is the amount of inflation that the dollar has. And I'll stick with gold for this argument because this is what I try to tell people when they look at the price of gold. For me, gold's price in the dollar is infinite. And by that I mean as the dollar inflates more and as more is added to the overall circulating supply, you would expect that gold would be worth more in terms of dollars. So whether gold is $2,000 an ounce or $5,000 an ounce, when it moves up to $5,000 an ounce, for me, that's just a representation of how much the dollar has inflated. Because, hard money, gold, for example, there's other currencies are pegged off gold's price, right? So gold is fixed, and as the dollar continues to inflate, when you see the price come up in gold terms, that really represents how much inflation has actually occurred in the dollar. So, when you hear about the $5,000 per ounce valuation or $10,000 per gold ounce valuation, that's possible because if the dollar inflates to those levels, you're going to see it represented in the price of gold in terms of dollars. Now, this is also important in terms of Bitcoin because Bitcoin does follow that same value, that same model. So, when you hear about Bitcoin in terms of a $50,000 per Bitcoin valuation or $100,000 or $1 million, it doesn't matter. For me, Bitcoin can be priced at $2 million a Bitcoin, but at that point, the inflation that would have happened within the US dollar would have been so much anyways that who cares, So all you need to know for this, though, is the idea of scarcity. And this is the perfect scenario to explain it to someone because, again, last week, the Federal Reserve supplied around $7 trillion to the markets created out of thin air. Whereas with Bitcoin and gold, you will never be able to create any more of it. That's why it's value. That's why it's valuable. That's important to remember. That's really one of the main things you need to keep in mind through this period. Now, there's also other opportunities going forward as the dollar continues to inflate away. One of them being precious metals mining companies, so gold miners, silver miners. If you're someone that is still looking into the stock market, this is not financial advice, of course. This is just what I look at my own independent research. But if you're someone that's looking at how you can get involved in equities right now, so you want to invest in stocks, again, my understanding and my opinion is that you wait until this settles before you purchase any type of equities right now because it's a bloodbath. People think that we're going to have a V-shaped rebound or something, but remember, people are still at home. No one's working. They're just being laid off. So I don't expect equities to do well anytime soon. But through these periods of recessions and then also inflation, precious metal miners always do well. Gold miners, silver miners. I've even seen uranium. There's been a uranium shortage globally, so uranium miners. And let me explain why they typically do well. When there is a recession or there's inflationary periods in the economy, what people do is they always go back to what's been hard money for thousands of years: gold, silver, metals. And because they've always been considered safe haven assets too. So in recessions, people flock to gold. When markets are doing well, they flock to stocks. But what's going on now is people are flocking back to gold and silver. So as the price of gold and silver comes up, there will be more pressure on the mining companies who dig it out of the ground to dig faster, to dig more areas, and to pull more gold and silver out of the ground because it's worth a lot more in the market now. Now, these mining companies typically don't have much attention on them. They're usually pretty cheap. Right now, I think a lot of these miners are anywhere from $1 or cents, less than $1 to a couple dollars a share. But as they now have more pressure to mine more gold and silver, there's typically a lot of money that's coming into them, so their stock prices increase significantly. This is where people make a shit ton of money on the way down too. Is by swing trading the precious metals miners. So I'm not going to give out any recommendations on this show for specific mining companies. I'm going to let you do your research from here on out. But if you are interested in checking out miners, look at gold miners, silver miners, palladium, again, uranium. There's a shortage of uranium. I've heard from individuals that a lot of these metals are actually starting to dry up, and you can't find them right now. So, for example, if you go online right now and you try to find physical gold, you're probably going to have a hard time doing it. If you go anywhere right now and you're going to try to find physical silver, good luck, because I've heard silver has been Mexico is one of the largest silver mining countries in the world, and you haven't been able to find physical silver in Mexico for months now. So we're starting to see a shortage in silver, and gold and metals. So it's only going to drive valuations higher. You know, silver is also interesting because, number one, silver usually trades at a certain percentage of gold's price, and it's been under that percentage for the last several years. So it's actually undervalued from a historical means now. But the other interesting thing is that silver is the most used precious metal in goods. So silver is used the most out of any of the other metals to make pretty much everything you see around you, semiconductors, cell phones, whatever, little gadgets and stuff. So if there's a shortage of silver globally, physical silver, and it's the most used metal to produce goods, that means that it's going to have demand on the investment side from people that just want to own it as an investment, and then also on a production side because businesses need silver in order to make their goods. So I've heard a large argument on silver being a pretty good pick to look at right now. Going through the next 5 years here, you can probably see some significant returns on that. But opportunities exist. Again, the mining companies are great to look at right now because they're going to have a lot of attention as metals move up in price, and their stock valuations will go up. And also they issue pretty high dividends typically during these times where their stocks are increasing in value. Gold and Bitcoin, I'm expecting to be the safe haven assets as we move into a world where your money is being inflated every week and it's becoming worth less and less and less and less and less. And this is hard probably for a lot of people to understand right now because we haven't lived, our generation, my generation, and my parents' generation even arguably haven't lived through this like transitionary period of a currency. But if you talk to your grandparents that were around in the early 1900s going into World War II, I have an Italian grandmother that remembers the lira and like a lot of these currencies. They understand these transition of currencies. And if you ask them what they were holding when they were fleeing the war efforts in World War II, they were probably holding their gold necklaces and their gold rings and hoarding gold and stuff. So, we're gonna be reminded on what hard money actually is, and gold and Bitcoin, in my mind, are the most sound hard money in the world right now. Then treasuries, U.S. Treasury yields going negative, so we'll pay attention to that going forward. I'm curious to see what ends up happening with this, but it is March 24th. The grass is coming out. Things are green. I know that it might be tough out there for a lot of people, but we have to remember the upside. We are moving into a more digitized world now, so I really do have faith that people will have the opportunity to work more from online, to find jobs around the world from online. So if you're someone that is struggling, if you're someone that may be unemployed and you want to learn about the opportunities that you could either start a business online or find businesses to work for online, leave a comment in the comment section. I consider myself a technologist, and I have a passion in a lot of these, new type of technologies. And also, I know a lot of resources for job boards and stuff for people that are looking for online workers. But try to keep your head up, hug your loved ones, try to get outside if you can. But until next time, guys, take care, and it was good talking to you.